Hello guys, hope you are okay. So for today, hope first I am on time, and today I'm trying to make sure everything is okay before I begin. So today the subject that I am dealing with today is why is a benchmark important in trading stocks? Now, you understand that there is some basics of trading that almost all traders do. Now, here I'm speaking about swing trading. Please, always when I am speaking, I try to emphasize swing trading. I am not speaking about day trading, okay? Hello, Harman. How are you? So, my name is, I will write it here. My name is Abdelkarim Ramain. So, I am not Djellala. So, just to make sure people know, Djellala is my business name, okay? Just to make sure you understand. Okay. So, there is a big difference. I always mention that in many of my videos. If you go and check my YouTube channel, I have thousands of videos. It explains the difference. Because when I see the index is to look for trends. It means to look what the index is doing. Whatever index is you are looking for. Either you are looking for the benchmark like Dow Jones, like S&P 500, or like Russell 2000. All these three are indexes. So each index has some stocks, and the average is what you see. So these indexes have 100 to 200 years. It means it began with the market itself. Okay? And some people might know the history that stock market begins in Amsterdam. I don't know which century, 15th or 16th century. It begins with two stocks. Okay? So understand that an index, it just gives you the average. What's the market is doing? Now, when you know the average what's doing, you have a clear idea or the whole picture. Where is the money is going? Okay? Are the people selling or are the people buying? And someone tells me why we should see that. Now, we should see that because it is so important, because it shows you the trend. So if you don't know the trend, how can you trade? Now, for me, I'm going to speak about my strategies later, because my strategies get help with the index, but it's not based really on indexes. Okay, just to make sure you understand what I'm saying. Hello, Saba. Assalamu alaikum. Alaikum salam. How are you? Harman Man said, my question is, if ETF delisted, so we will get our money back or not? So for this question, usually Herman, I know maybe you have some questions to ask, but here I am giving a lecture, or I am giving a subject to explain. Usually when I finish, I deal with questions. Okay, if you have time, you can wait for us to deal with what I'm speaking about, and then I can answer your question. Also, I will give you my email. It's always in my okay. I give you my email. If you want to ask me any questions and you have a lot of questions, you can just send me questions there, and I will send you an email, which is okay. But in general, when you say ETF is delisted, you should go to the website of that ETF. It's the company who made that ETF. And you will find the news of that ETF. You will find how do you get your money. Or you ask your broker. Your broker knows. Or he can give you the link to the website to check them. Because something is delisted, I have seen this this year. We have two ETFs that are inverse ETFs. They were delisted. I don't know what's the reason. They were just delisted. And we got our money back. So for me personally, I got my money back from that ETF. So for you, Herman, you should just ask your broker, and then he will give you the information, or he will give you the link, or you can call them because it's a company. You call them and you. But most of the time they announce this in their news. If you go to that ETF company, they will announce it. Okay? Hello, Wiseman. Hello, Top Series. Thank you very much, Top Series. So I'm just beginning to explain why is benchmark is important. Understand, swing trading, it's very, very important to know the whole market. Where is it going? It is important. For me, one of my tools, it's not a big tool, but I'm just trying to look what's going with this index. For me, I'm speaking about benchmark. So I will just right now, since I am speaking about benchmark, I will give you some benchmarks. I will give you 5 big benchmarks, and you just try to see how the mood is. Okay, so just let me go to these benchmarks. Okay, let's go to the Dow Jones. Now look at the Dow Jones. Look at the Dow Jones. Now what do you look here for? You look for the trends. For example, here we have a big trend. Okay? Okay? So this trend, it begins here in 3rd of October 2019, and it finishes, let's say, here on the 12th February. Okay? So this is one part of the trend. So this is just to understand what's going on in the market. Now, this is an uptrend. As you can see, uptrend, what does it mean? It means the 30 stocks in the Dow Jones, where most of them are going up. Okay? Now, let's see the coronavirus news. When the news comes, see what did happen in 1 month, at the end of February, at the end of March here, 23 March, all this, that what you see, what is it? It's a downtrend. Now, what does it mean, a downtrend? It means that most of the stocks are sold or sold short. So if you here you go long, you will be losing a lot of money. And then you ask yourself, why I am losing your money? Because you don't see the index. That is very, very simple thing. That's why I'm trying to teach you something that it is reliable on the market. You should look at it if you are a swing trader, because you are following the trend. Now, from 23rd of October, 23rd of March, let's say we begin from April, okay? Let's say 7 days, 1 week, it's not important. Let's say from April. Now, from April to August, all this is what? It is an uptrend. Okay? So in this, you are going long. Here, you are going long. Here, either you go short or you have what we call the inverse ETFs, or you buy puts. This is how you trade. It's not the stocks are going up and you go to short. Yes, you can short some stocks, you find, yes. But this is the majority of the stocks what they are doing. Okay? Now, Dow Jones, we have the 30 biggest stocks. Then you go to S&P 500 biggest stocks in America. They are big, but they are not as big as Dow Jones. These are 500 selected, which are those that are big companies. They make a lot of money. That's why they are from S&P 500. And the average, you see the market is the same. It was going down and then it was going up. Okay? So if you understand this, you can make money. But if you don't understand this and you don't know how to take advantage of this, most of the time you are not making money. Now let's go to gold. See, gold this year, especially from here, yes, it's the same as the market. Okay? Now the gold in the coronavirus, it doesn't go that much down, but after that, it has been so good with the gold. For example, it was 138, now it is 182. So you see, now if you bought stocks that are in gold beginning of April or at the end of March, you will have made a lot of money. Okay? Now silver also, see silver, how good it is. See here how silver goes to 10. Here, 1086. Now it is 24. It means 124% for silver. Silver has gone wild this year. Okay? It doubled. It's more than doubled. So you see that? So this is silver, like an ETF of silver. I don't know where it goes, down or up. It depends on the market, but I'm just showing this. Okay? So, guys, Saba said, dear Karim, do you think with day trading people can make steady money? Hello, everybody. Nasa. Now, Saba, listen, you should always understand that each vehicle of trading has characteristics, has some people who are good at it. Yes, you can make money from day trading, you can make money from futures, you can make money from options, from forex, from cryptocurrencies. It means you can make money from any vehicle. The only thing that needs is you understand what you are doing. That's it. Do you have a strategy? Have you tried many months, many years? Because in order to understand the market, you should stay, you should try, you should make a lot of strategies, a lot of techniques. And those techniques that are good and you can make money at that time, what you need only money. Because when you know how to make money, the problem for you later is you don't have money to buy and to make a living. It means, this is what some people are saying, is they say how to make a living from trading. You need money. Don't follow these people that 1,000 you become millionaire and you can rely on this. There is no one in history that has made this. Okay? That have lived from trading. Most of the thing, they have money. Sometimes in penny stocks, Saba, you say I lost lots of money. Yes. Why you lose money? You lose money because you do the same mistakes. I'm telling you. If you, for example, Saba, if you, for example, send me your last 3 trades, either you make money or you lose money. Just send it to me. Okay? I will give you the instructions. When you buy, which day? Okay? Why you buy? What's the criteria that you buy for? Why you buy this stock? And when you exit, I will tell you what are the mistakes that you have done according to my rules. Because for me, I make money. It's not because I'm genius. It's just because I have made rules that I respect. I don't just trade randomly like this. If a stock, the criteria has not been met, I'm not going to buy this stock. I'm not playing with my money. That's the only difference between me and some other people, beginners or intermediate or professional. Even some professional, they do crazy things. Sometimes they lose all their money. This is what we call, I'm not saying, this is what we call greed. Greed is when you want, in your mind, you want to make a lot of money. You don't like 10%, 20%, 30% a year or 40%, 50%. You want to make 400%, 500% a year. So these people are doing risky trades. That's why sometimes they go bankrupt. I know, for example, this guy who is called Livermore, who is one of the famous traders in the 20th century, he go bankrupt 4 times. Do you understand bankrupt? Bankrupt, it means that you lost all your money and you have debt. But this guy is so crazy that you give him some money. He pushed this money too much in order to make, he did crazy trades. That's why he make a lot of money. But sometimes when he does mistakes, he will lose all that money. So you understand? So for you, Saba, you say, I don't like to stop. Listen, I have seen cases like you, Saba, as you are speaking to me. I don't like to stop. It's just because it becomes an addiction to you. You are not anymore trading to make money. You are having an addiction. To trade is just like gambling. You think that you can make money if you do this. But you try it. Sometimes you make some money. You get happy. Then you try it. But your money, let's say you have 50,000 or 70,000, 100,000. You are going to kill all this money trying. And especially if you don't have strategies. Because when you have strategies, you begin to make money. And you stop doing crazy things because it's your money. Are you going to make money or are you going to gamble? Now, in trading, most of the people who don't know trading, they say, oh, trading is just a gamble. You don't know. Who tells you that the stock goes up? No. We are not doing this. There are probabilities. There are a lot of things that we rely on. Okay? And all the professional people, all the people who are making money are doing the same thing. I'm telling you, it's the same thing. Just some rules that are here and there, but in the essence, the basics, most of the traders are doing the same basis. the same basics. Okay? So, continue to trade. Okay, if you wanted to continue to trade, you have, let's say, $50,000. You want to continue to trade. Just take 5,000 or 2,000 and play with them. Play with them 4 months, 6 months, 8 months, 1 year, 2 years. And leave your money there. Do not play with your money and just you put all your money in the market you don't know. The market will punish you. Okay? Top Series said, Karim, do you set yearly goals for swing trading? No, I don't have yearly goals because you don't own the market. My goal is to be green every year. This is the goal. So I should respect the rules. If I am in a trade, it doesn't work, I should exit. There is a rule. Exit. I don't keep my money 5 months, 6 months, and I'm not making money. What I am doing there in this stock? Is it because I love the stock? I don't love stocks. I only love the stock which gives me money. Okay, so it's a bit weird, but this is it. If I am losing money in one stock, I'm saying to myself, if this money I put it in another stock, I could have made money. So I am losing my time and I'm losing money. It's not just you lose time. You are losing money also because you are not making money. Okay? While the people are not, they don't know how to make money. For me, I need more money. If I have millions of dollars, I will be more happier than now. It means I need always more money because I see stocks daily. These stocks go up and I see how much I can make with these stocks. So I have no goals. The only goal I have is to be green every year and to make high performance than last year or the other year. But I am not going to stress myself out. I am not here to stress I know the market. Sometimes it is very, very generous. Sometimes it is going up and down, up and down. It's not generous. Sometimes it is bad. So I should follow my rules in order to be green every year. I don't care how much I make. Because I don't own the market. I say the market, oh no, this year I must make a 50%. How? Since I'm following stocks. Stocks you are following, you just buy, few days it goes down. You begin to lose money, so you should exit. So you lose, it's natural that you lose. You don't own the stock to push it up. There is no manipulation anymore. Like in the 20th century, where the people they manipulate stocks. You can't manipulate stocks right now. All the stocks you should trade. You are part of the game. So what you should follow is follow your rules if you have rules. Now, if you don't have rules, you should make your own rules, or you should study other people's rules and you see yourself. Okay? And for me, as a lot of people, you guys, as a lot of you guys, you understand that I have been day trading and make money, but I find that most of the big traders, they stop day trading and they go to swing trading. Swing trading because it's easier and less stress and less work. So you should just be smart. You buy a stock. For example, I am now in stocks. I am, for example, in Apple, in Facebook, and other stocks. How many months? 4 months, 5 months. Last year the same. The other year the same. But for me, I know when to buy exactly. At the beginning of the trend, I see this, I buy. I make money, yes. Okay? So this is my experience. This is my experience. And I do it with a lot of stocks that I am with. 4 months, 3 months, 6 months. I don't know how much I make. Because this is impossible to know. Impossible. How do you know where the trend will be? In 1 month or 2 months or 3 months. There are some stocks that they go just few days. You can make high percentage than a stock that you stay 2 months or 3 months or 4 months. So for me, I just stay until the trend dries up. Then when there is no money, I should exit and find other stocks. This is what I do always, and I am successful since 2011. 9 years, I am still doing the same thing. Okay? So, if you want to be educated, you should just see the rules. It's very easy to learn how to trade, but you need you need practice and you need nothing. So Saba said, I made money on demo with real account. I get very nervous and lost money. Now, Saba, this is a problem. With a demo, when you make money or you lose money, your feelings doesn't interfere. Your feelings doesn't interfere with the business. Because if you make money, you said, oh, it's just fake money. If you lose money, you say, oh, I am happy. I am happy not in that stock because I have a gap down. I lost a lot of money. So you are not in real life. Okay? You are not in real life, in real trading. When you are real trading, you need rules. Rules that stop you from doing stupid things. If you are losing money, you should exit. Don't tell me you will stay tomorrow and next week and the other week. Maybe the stock will go up. This year you are making a big mistake. That's why beginners, they make mistakes because of their psychology. Because they don't want to apply rules. They don't want to lose money. They don't want to lose little money. But they like to lose bigger money. It's because of their psychology. For me, for example, when I buy a stock, I know if it doesn't work, I will exit at that price. I know before I buy the stock. Now, I see some people, they buy the stock, they don't know when to exit. So when it's going down, they have no plan to exit. No price in their head. So the stock will be going down, and they lose a big chunk of their money. If you continue to do like this in the whole year, you will empty your account. This is for sure. This is a guarantee. Because the market punishes those people who don't understand. But the market will reward you sometimes with good things, with a good trend, with a good excellent gap up. I have seen this year students, when they begin last year, I have a student, 2 or 3 students, one from India, one from USA, and I think one from Europe. When they begin, they still lose money and they say, okay, I'm losing money. What I am doing right, what I'm doing wrong. I begin to follow them. Okay, here you have done wrong. So just exit. Here, stay. They stay. But this year, some people they follow trends. They make a lot of money. They say to me, I have never thought that they can make money easily. Just following the rules. Because what makes you a good trader is just rules. It's just you have strategies. I'm not saying you come to me and you study my strategies or gurus. No, just go to everyone. If his strategies are good or rules are good, you can make more money also. Because most of the time, almost all the people in the market, if you make money, it means you have good rules that follow the market principles of trading, or what we call basics of trading. Okay? Now, Saba, you said you are doing future S&P 500. The E-mini, it means you are speaking the E-mini. Are you crazy? Are you crazy to go to futures? Futures is a derivative. It's like options, it's like forex. It's so dangerous. If you succeed in stocks, then you are allowed to go to the other dangerous things. S&P futures are not for beginners, except when you put little money into this micro E-mini. I have heard that this year or last year there are some E-mini that are very very cheap. Yeah, you can do that. Okay? But understand, if you don't know how to follow the trends, if you don't know how to trade, it's the same thing. You will be losing more money. Saba, he said, if market goes against me, I start crying. You write all about strategy. Yes. What is it? Macro? Yes, macro futures. I think it's very cheap. You can put little money and you can but the problem is that if you don't know how to trade, it's the same problem. It's the same problem. The problem is not where you go. The vehicle of making money. It's not that is the problem. The problem is that you don't know when to enter, when to exit with profit or loss. You don't know. That is the problem. Your problem is not and there is a second problem, is the risk. Futures, options, and forex and cryptocurrencies are dangerous vehicle of making money. You should be more into intermediate level or advanced level as a student in order to go there. Because there, if you are good, you can make a lot of money. Better than stocks, except for penny stocks and the other stuff. Okay? Because for penny stocks also, it's the same as as futures or forex or options. You can make a lot of money if you know how to trade. Okay? Yes, you can make very fast. There are a lot of people who I think I have read a guy who is trading futures before, and he made a lot of money, and he made a big subscription, and he was very very famous. But he just find a way to make money, and he taught all this to his students. But I read it in a book. But you understand that sometimes the market in 1 year, it is so strong, any stupid person can make money. But sometimes when the year is going up and down and there are a lot of trouble, most of these people, they lose a lot of money and they can't. It means they are weak. In general, they are weak. Just good luck and good market makes them make money. And this, you have a lot of people like that. Saba said to me, so today I am just answering questions without speaking about my subject. Saba, you changed my subject, man. So he said, would you explain why futures is dangerous? Because it's leveraged. Leveraged, what does it mean? It means that you own big money with a small money. Like an option. An option, for example, if you want to buy 100 shares, okay? Let's say 100 shares of a stock. Let's say this stock is $10. Just say we make a simple thing. So I will explain this in a thing. Saba, I will just explain to you this. No, it's okay when you ask a question. Most of the time I don't do. Okay. So leverage. Okay, just I will make this to make you understand. Okay. So leverage, what does it mean? It means small money. Okay, small money. I will give you with options. It makes clear. Now let's say the stock is $10. Okay, is $10. If you want to buy 100, okay, $1,000. Let's say you buy this stock. Okay, you buy this stock. 100 shares, you pay for the stock. Okay? You pay $1,000. The stock is $10. Okay? So this is an example. Now, when you go to option, okay? Now you buy this instead of paying $1,000. You pay, for example, only $10 for a contract. Okay? $10 for contract. It means small money, you control big money. That's why this is called leveraged. Leveraged, it means because you can buy 100 shares of a stock that it is $10. You buy it with a $10 contract. So you are paying less, but the risk that you have is 100% of your money. So it means $10. After a few days, it can go to worthless. It can go to zero. That's why what you do is you are here. You are in a risky trade. Okay? But you think that $10 is just a little. So you buy 10 contracts. 10 contracts. 10 contracts is $100. But the risk is 100%. Now let's say after a few days you lose it all, or let's say what is left is $10. It means you have lost 90% of your money. Now this 90% of your money, if you have $5,000, if you continue to lose like this, you will lose 90% of your money. It means all your money. Okay? It means $4,500, you lost it in a year. And what is left from you is $500. So this is why options is called leveraged vehicle of making money. Futures also. Futures is the same. Because what you buy is just a small fraction from the money. It means that you are paying small money to control big money, like what we call the E-mini. Now they make. Do you know now why they make E-mini macro, because some people, they don't know why they make the macro. It means a person, if he buys a contract with $2,000, this is in futures, with, let's say, E-mini, okay? Some people, they see that the people, they tend in these years not to trade that much. It's too much. So when they say macro, you will pay only $200. So the beginners, all the beginners are happy, because they think that $200 is cheap. This is what they think. But $200 is not cheap. It is just what you have as money. Because you put 2,000 or you put 200, is the same thing. They did not do a discount for you. Because if you lose this, if the future is against you, let's say $2,000, and you weigh too much, now it is $500. So what does it mean? It means you have lost 75 of your money. Do you understand what does it mean? 75% of your money? This is what you should focus on. Focus on the risk. This is the risk. If you don't know the risk, you will never make money. You are risking. But here also, if what is left is $50 after you lost 75 of your percent of your money, it's the same. 75% is the same as 70% of this money. $2,000, 75%, what is left for you is only $500. Now, you put 200. What is left for you is $50. What does it mean? You lost 75. It's the same thing. Now 75, look at your account. This is your account. Are you going to put some trades to lose 75% of your money as a risk? You are crazy to do this. You should be excellent in futures in order to be with high risk. You should be excellent. You should be doing a lot of trades that you are making 100, 200, 300% in order that you lose 70% or 20% or 30%. That's why all these are called leveraged. It's like the same when you do the margin. It's the same thing. Okay? It's the same thing. Margin is the same thing. You double your winners, you double them, but also you double your losers. Okay? You double them. So, if you are bad after using the margin and you double the losers, you will be losing a lot of money. That's why a lot of people, they lose a lot of money and they stop. In 1 year, most of the beginners, they stop on 1 year. 1 year. If you stay to second or the three, some people, they can make a little money here and there, and they lose. They what we call break even. And most of these people who stay many years, they are break even. It means in the whole year, he doesn't make money. He trades a lot. He makes some money. He lost a lot. He lost all his profits. But the end of the year, 31st of December, and the 1st January, 31st of December, he will find that it is the same. He entered with $5,000. He will find $5,000. This is for the people who know little about trading. But the other people who begin with 5,000, they end up with $500, for example. They lost all their money trading because they don't know. And this is the risk that I am always speaking about. So, guys, Hello, Fabian. How are you? So, guys, try to understand this idea of risk, and if you are interested, you can go to my channel and you can put risk. Risk. It's not just only stop loss. It's a lot of things. Okay, it's a lot of things. People, they think that it's just stop loss. No, it's not stop loss. There are a lot of things. Risk is when you do some stocks, you don't have that much risk. Even in the same stocks, there are some stocks that are riskier than other stocks. Penny stocks are more riskier than common stocks. IPOs are more riskier than common stocks. So you should understand what you put your feet on. And that is the problem. Your problem, if you don't understand what you are doing, this is the real problem in trading. Especially when I speak about risk. If I tell you that risk is trading, I know you don't believe me. But through the years, you can see that the biggest mistakes that you have done is about risk. Okay? Sometimes you don't know what you are doing. You don't know. For example, here I give you a simple example. People, they play the fool. Okay? People, they play the fool. And when they get hit, they say, oh, why? For example, the earning news. Understand that the earning news, there is no way to know if there is a gap up or gap down. There is no way. No one will tell you. Because it's the company who announces the news. It's not someone else. You can't get this information before. Also, the traders, they decide. Sometimes the company makes money, but there is a gap down. Sometimes the stock doesn't make money. They say they lose money, but you have a gap up. And you get astonished. You say, why? It is because you don't understand trading. If you have understood what is trading, you could not be astonished. Okay? And this is one of the biggest issues in trading. Most of the people, they don't believe that they should get some education. They should learn. And they say, okay, I know how trading is. Just a stock, you buy it here, it goes up. It doesn't go, it goes down. Okay, you lose some money, you just exit. That's trading. But ask yourself, why each year you are not making money? Why? If it is easy as easy as that, why you are not making money? You begin to blame others. Oh, it's those that hedge fund, he sell short the stock. I could have made a lot of money if that guy is saying in the news that he has short the stock. Why he should sell short the stock? Okay, so you begin finding excuses to your losses, especially when you do mistakes. Okay? And this is a real problem in trading. So let's continue with why is a benchmark important in trading. I said the whole idea about the benchmark, it shows you where the stocks are. I always answer this, but I will try to explain it in here. At least you get an idea, a good idea about that. Okay? So I will show you how the market moves. I know. Okay. Let's give you the Dow Jones, and I will explain that. So I will just show you. Okay, look, guys. I'm trying to just explain. Here is the Dow Jones. Now, Dow Jones, if you can, if you remember, just to make sure you understand this, it is, let's see here, let's make it smaller. So it is 30 biggest stocks in USA. These companies are big, are so big. Most of these companies are international. Now, these are in different sectors. It means they represent different sectors. Okay, so we say represents different sectors. Okay. Now, what you see, okay, let's put the green here. This is, what you see like this trend like this, okay? This trend is what we call the average, okay? This is the average. Now, what does it mean, the average? It means you find from these 30 stocks, let's say, just an example, okay? Just example. Let's say you find 20 stocks. The average of them is here. 20 stocks are doing the same. But there are some stocks that do like this. Okay? This here are stocks that are doing better. These, I call them the leaders. Now, the leaders, they are not a lot. Let's say the leaders are five companies that they are better than this market. They are not the same as the other. They move faster. Okay? They move faster. Now, you find also stocks that are going up and then they go down. So those are the losers of this year. Okay? So let's say they are 5 losers. It means in each index you will find leaders, the average stocks, and the losers. So what is your job? Is to find the leaders. Now, my strategy is based on these leaders. I search for those. Why? Why I search for the leaders? Why I don't find the average? Because I want more money than the average. For example, the market from this day here to now, let's say the market, the average of these stocks have made 25% up. Okay? Now, 25% up, if you bought this kind of stocks, you will have that. Now, but for me, I want 50% of these stocks. 50% up. You see that? That's why I will make more money than those people who are searching, who don't know, and search just these stocks. They will be making 25%. Now, some people, they don't know how to trade, and the stocks were being going up, but then go down. Now they make, for example, 1%. Okay? So you should know where you are in the index. And you tell me, for example, I don't know my index. So you should see the sectors and indexes. I will just show you this. Okay? When I finish the representation. So, Saba, you said you 100% right about strategy, education, and experience. Yes. Now let's see now, because I know I have showed you the benchmark, the big benchmark, but you can check the small indexes, the industries in each sector. You see what's going on. Okay? And this is very easy. But my search and there is one which is you can find by search. You can find all the industries. You can find all what is moving. But we are not going to buy at the end, because moving, what does it mean moving? All the stocks move. So we want to the beginning of the move, or not the end of the move. Okay? Now, my search is based on some criteria. You find the list, and after these stocks, you go and you begin to search for specific stocks that meets the criteria that I have. And this is what I teach, and this is what all this year we are now at 101%. Now, how do we get to 101%? You go to my subscription. You see the stocks that we have bought. What is the stocks that we bought? What is the stocks that we stay for 5 months, 3 months, 6 months, 2 months, 1 month? And you see what's the stock that we sold, and you see why we are making money. That's so simple. Okay? Now, there is another way, which is called the training level 3, which is how to search for stocks using an industry index. It's the same strategy, but it is manual. Manual, it means you should target some stocks that you like, that you see that always they move. When they move fast. So you wait for them until they met your strategies, and then you buy them on time. So I will give you some examples of the yes. So here is Dow Jones. Let's for me. Let's say I show you how to go here to go to any to go to any sector. I just give you an example to make sure you understand. Okay, here you find morning industry groups. It means morning industry groups. Morningstar is a company that puts the stocks into sector and industries. They put them and they name them. Okay? For example, aerospace and defense. Okay? This is the sector. It has 2 industries and their stocks. So I click that, the sector. This is the industry. Okay. Look at the industry. Now, this industry, it is called aerospace defense measure drive. This is the industry. The sector is called aerospace and defense. Now, you see after the coronavirus downtrend, you see that the stocks have been going up, but as you can see, this aerospace defense, it didn't do good. It means it's not a big deal. You see that goes up a little bit, go down for many months, nothing. Then it goes up, then it goes down, then it goes up a little bit. So the index, the majority of the stocks are not doing that much. Now let's see the other industry. It's the same thing. So the whole aerospace defense sector this year is not doing well. It's just, in general, it's just because of coronavirus, and everything stops moving. There is no flights, there are no flights, everything is collapsing, and so on. Okay? So, let's go to stocks right now. TDG, it's 498. But this year, as you can see, the stock has not done that much. It's the same as the index. So this stock, it is doing the same average. Now let's go to the second one. This is better, little bit better, but it's not the same. This is the same better. This is the same. This is the same. This is worse. This is the same. I will show you now if I find a good stock that it was good. This is the same. Same. Yes, look at this. AVAV, if you see, you find a good trend. The stock here was 45, it goes to 81. So what does it mean? It means it nearly doubled. So this stock is doing better than the average. Okay? If you compare this is excellent compared to the other stocks. You see the other? Now this one, RGR. Okay? You see how excellent it is. You see how the downtrend, how it was very, very small, just 2 weeks or 3, but see how excellent is the stock. From 38, it goes to 80. Now, what does it mean? Okay? It is more than 100, for example, 20%. Now, if you have been in this stock, it's doing better than the industry itself. Now, for me, you find me in this stock, but I will not be in this stock. So you understand? You understand how the indexes gives me information on how I trade. So I will just show you some stocks. But if you have the chart, you can check by yourself. You see that one? Okay. You see this one? You see SWBI? So the stock here was $6 in March 11. Okay? March 11, it was $6 or 5. The low is 5. Okay, $6. Now it is 25. Now, what do you think if you have been here? $6, you have made 400% of your money in this stock. So you see, the choice of stocks, it is very, very important. Very, very important to check. Now, these stocks, you can find them easily, on time. But you need a way to know how. And this is what I teach. See these stocks, for example. What if you buy Air? The stock was 12, now it is 20. Okay, you have made some money, although it doesn't show that much. But still, you should be in a good trend than a trend that it is not showing. You see this stock? $2, now it is $6, it's $300. It's the same principle. That's why, guys, they told me, oh, does your strategy work on penny stocks? Yes, this is the penny stocks I'm choosing. I choose the trend. Any stock that goes to in trend, I choose it. You see that? MICT. Okay. You see? You see how good when the trend is going? Let's say here it is 125. Now it's 395. So it's like 300%. Now, you tell me how I find these stocks. Yes, there is a strategy, and it's easy to find like these stocks. But you should just search, have your money ready, and buy and wait. So this is not doing that much, you know. So this is just something that Wiseman said, Saba, you will be successful someday in stock market for sure, because you are willing to listen to those that have more experience than you. Passionate about passion. Thank you very much for coming. I will give you the link. You should install it. So the software is this one. Please, it works only in Internet Explorer. And choose the free version. Do not download anything. It's just do not download the broker. The broker version, it's not good. Okay. So this is what we use in our stocks, and for since 2010 when I discovered this, and a lot of guys online, when they saw me using it, they use it now in all their stuff, because it is so good and it's for free, so you don't pay anything. And the good thing about this, I don't find any other charting software that it is the same as this one. It gives you industries, it gives you sectors, it gives you ETFs, it gives you mutual funds, it gives you all the market in your hand. So when you are doing some stuff, it will be very easy. Now, why is a benchmark important in trading stocks? I said that, thank you very much, passionate about, there is also passionate about passion. If you go to this free, you can find the free, there is a free training how to use this chart, and there is a free training about swing trading. If you can get them in my website, if you want to, just to know how it looks like, what are the parts of the chart and the other thing, you can just do that. Use Internet Explorer, because it will not work in other browser. Don't use another browser. Okay? And just try to do the training. Now, so the benchmark, as I told you, today I think it will be a very short live. I'm not going to do it a lot because the subject is small. So the benchmark is so important. You always try to look what's the market is doing. But this, guys, it doesn't help you that much if you are a day trader. If you are a day trader, you should see the news, because it doesn't matter for you the market go up or go down. For you, what matters is a red day or is it a green day. Okay? So you cannot take profit from the indexes, except when it is very bad days. So you can just take it to have an idea. But swing trading is not the same as day trading. The characteristics and what we are looking for is different. So that's why, guys, do not waste your time mixing the thing, okay? Or using techniques of swing trading, you put it in day trading, or day trading, you put it in swing trading. This will not work for you, and you just waste your time. You should specialize. Either if you like day trading, you should go ahead and do day trading for many years. You should succeed. Okay? For me, I have only two training. Training level 11 and 12. It gives you some techniques on how to trade, how to begin the day, what to look for, what stocks to choose. This is just basics of trading, and I have used all these techniques in the past. Okay? So, guys, if you have some questions about the benchmark, or you have any other question, please, before I end the session. Because today it's not a big subject. It's just the benchmark. I don't want to talk too much because there is no way to do that. Saba said, yes, wise man, I agreed. I wish I couldn't trade my real account like my demo account. Calm and concentrate. Now you can, there is no, listen, Saba, the market is always here. It has been here for 200 years or 500 years in Europe. It is here for this year, next year, the other year. So don't worry. Stocks will not leave the market. So you can begin at any time you like. And you can begin to learn strategies at any time. So even if you don't have a lot of money, but it's okay. You begin with small money and then you save more and more and more money. And then you begin as a real trader. So the hardest thing is to begin right. Because since you are doing mistakes, you continue to do these mistakes and you want money. This is a big problem. You know, trading is a business. You can make a lot of money in a short time. Okay? It's not like a job. When you have you work 1 hour, you get $10 or $15 or $20 or $50 or $100. So trading is not a job. It's a business. You can make a lot of money from it if you know how. So it has nothing to do with time. Like a job, like 1 hour. You give your employer 1 hour. You say, okay, how much you pay me? You say $20. You say, okay, I give you, I will work 40 hours. So you know how much you make. But in the stock market, you will never know how much you make. Sometimes the market is so generous, it gives you so much money that you will never thought of. Okay? You will never thought of. Sometimes the market is so generous. This is when you begin to learn trading. It means when you know the what we call the rules, the strategies, you apply them. And I have a training level 19, how to fix your trading problems. And I have an ebook which is called 30 Reasons to Lose Money in the Stock Market. 30 reasons, it means you have 30 problems. If you read this ebook, you will see yourself you are making some of these mistakes. If you correct them, I guarantee you will begin to making money. Because if you do the same thing, you will get the same result. That is the way things are. Okay? So guys, do you have any questions for me? Since I have already finished very quick for 1 hour 14 minutes. So I know today it's not a big deal. The market last week is better, and hope this half of the year will be better and better. Maybe everything will opens, flights will opens, more companies will opens, and the market will be more optimistic, and the people they buy more stocks, and the market will be excellent or better this year. Okay, so guys, if you need me, as always, you send me an email. My email is always here or always in my videos, so just send me an email and I can answer your questions when you ask them. Thank you very much, Saba and the other guys, and see you next time.